All right. Hey guys, how are you? Are you so stoked to be walking into day two? Well, Jen and I are ecstatic to be here with you guys today. All right, so welcome to day two of the Apartment Investing 5-Day Challenge. This is Stacy Conkey. I am right here with Jen Conkey, and we are going to rock your world today. All right, grab a pen, grab a paper, grab several pens in case one breaks, grab several papers, because I got a lot to tell you and teach you today. All right, let's get going. All right, so what we're going to be covering today is lead generation. So another term for lead generation is creating deal flow. So nothing happens in your business if you don't have any deals. So, sometimes new investors will focus on all the other little things they need to do. Oh, let me get my LLC set up. Oh, I need to make sure that I have my email address right. And now it's day after day and I can't decide on the right one. And, there's so many little things that you can keep yourself busy with that really do not matter. They just don't matter. If you don't have lead generation, if you don't have deals coming in to analyze and make offers on, you're not really in business. All right, so there's about 1,000 different subjects within the arena of apartment investing, right? But there are a handful that they're just so critical. They literally drive everything. And this is one of them. So I'm really excited to get to dive deep with you on this today. Some of the stuff I'm going to show you today, I've never done outside of our mastermind. So we, our mastermind students who've made the investment to come and be coached by us and learn and have us hold their hands through their apartment deals, they all have had this and probably plus some, but we've never gone public for free with a lot of what I'm going to teach you today. But Jen and I talked about it. And we just decided, you know what? We really want everyone to have as much of a leg up as you possibly can, stepping into 2021 and just having an amazing, amazing year. So you guys ready to rock? Cool. So before we get too far into that, there were, I'm going to say, a boatload of questions yesterday that came up during the video, during the time I was presenting, afterwards, and all day. And between Jen, our admin, me, the rest of our team, it was crazy. So what I realized is that there's probably a little bit of extra time I need to spend on some of the administrative things so that you guys are empowered to know where to go to get what you need so that you can move powerfully through this challenge without getting stuck on some of the administrative stuff. So first things first, and I'm going to go through this section quickly, but we had so many questions that I just realized it's necessary. So the first question was where to sign up for the challenge. And of course, in my mind, if you're watching this video, you are signed up for the challenge, but that's not necessarily true because if you're in our Facebook group, you might just be watching the live in the Facebook group. And our chief technology officer has our live going in multiple locations. We want everybody to watch it in our Facebook group. So if you are watching this anywhere other than the Multifamily Real Estate Investing Facebook group, do me a favor, while I'm still talking about this part, go find the Multifamily Real Estate Investing Facebook group and go watch this live in there, because that is the one place that Jen, when I'm talking, Jen is in there moderating, answering questions that come up, things like that. When she's talking, I'll do the same thing. But that's the only place that we are. And I want to make sure that everybody gets the benefit of all the questions and answers being asked and answered during the live. Okay, so make sure you go to the Facebook group if you're not there now. All right, but if you are not officially signed up for the challenge, let me explain what that even means. Signing up for the challenge, what that means is you've registered through our Messenger bot. And there's a link. I'm going to show it to you and I'm going to show you what it looks like. All right, when you click on that link, it will take you and it'll open up basically Facebook Messenger. And what you're seeing on the left, where it says, "Where's your wealth coaching?" and the screen looks skinnier, that's on a phone. So when I clicked on that link, that's basically what it came up. So if you've never seen this before, picture of Jen and I with a welcome and are you ready, blah, 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 then you're probably not registered. If you get to the point in the going back and forth where you get the message that's circled in red, says, "Thank you, you are now registered for the 5-Day Apartment Investing Challenge." If you haven't seen that, then you're not registered. If you have seen that, you are registered. And if you're already getting bot updates, like if you got the tool, the tally sheet that we sent out last night, then you're registered. So don't worry about it. But if not, get registered today. So on Wednesdays at 4 p.m. Pacific, 7 p.m. Eastern, every week we have a session, what we call it Ask Us Anything. It's any real estate question you have. So when we're doing a challenge, it's a really good opportunity to get in there. Any questions you have, that's the time to answer it, right? So you would just ask questions in the comments, but Jen and I are standing there reading the comments and then answering your questions. All right, but how do you register for that? Because you want to make sure that you register so that you get the reminder. All right, so first things first, where to find the unit section. So in the unit section, there's a unit for the challenge, and there's day 1, day 2, through day 5. In day 1, you're going to see the video from day 1 so that you can go back and rewatch it if you need to or reference it. You're going to see a post for the workbook so that you can download it if you don't already have it. You're going to see a point for the tally sheet, which I'm going to talk about in a couple of minutes. And then you'll see another download for, or another post for the homework. All right, and the homework is where you're going to attach your homework. All right, but let me show you where the unit section is, because apparently not everybody knows where it is. So let's go ahead and handle that right now. All right, so if you're on your computer and you're in our Facebook group, this is what it looks like. All right, so right below where it says multifamily real estate investing, you'll see about, discussion, units, announcements, room, like this big long thing of different menu items. So units is usually the third one in. I have a big red circle around it. And then events is a little bit farther over to the right. Okay, so that's where those are. So if you're looking for something in the unit section, click on units. It will bring it up and go find the unit that you want and post there. For events, that's where we have all of our events, including like day 1 through 5 of the challenge are in there. The Ask Us Anything. Jen has the Warrior Mindset training next Monday. That's in there. All of the future things that we have scheduled are in events. So that's what it looks like, and that's where you'd find it on your computer. All right. When you click on events, so on the right, click on events. If you don't see what you're looking for, and you can see based on the dates that perhaps it would be lower if there was something lower, I want you to look at where it says see more. So right now you see we have the Wednesday apartment challenge, day 3, and then it stops right there because it's full with other things. So you click on see more. When you do that, it expands out. So now I want you to look at the bottom left of your screen right now. So see the apartment investing challenge day 3 is there. And what's below that, hiding, was the Ask Us Anything About Real Estate. Okay, so if it's hidden on your computer, and really what it depends on is how zoomed in or out you are, because different computers, different amounts show. So you see the Ask Us Anything About Real Estate. Now, because I'm an admin for the group, it looks different for me as it looks for you. So I'm actually gonna have to show you in a group that I'm not an admin in, what it looks like, so you'll know. So look to the right. Now that has nothing to do with our group or real estate or actually anything. Jen and I, we invest, just like many of you invest in your knowledge and your education so that you don't lose money as you're going along. We do the same thing. So I think we've probably invested nearly 6 figures just in the past 13 months, really since starting our Facebook group, to really learn how to do this. And we like to be around other very high performers and for networking. So anyway, so we're in an inner circle with a company called Ad Outreach. And so if I go to their page and I have the event that's next Tuesday, January 26th, and it says going, maybe can't go, or invite, that's what it will look like for you on our page. But I couldn't figure out how to show it to you since I'm an admin, what it would look like for you. So you'll see Ask Us Anything About Real Estate. And if you click on going, then it will send you a reminder when it's getting closer so that you don't forget and miss the opportunity to ask us any questions. All right, now I want to show you those same things, but on your phone, because I realize a lot of people are using their phones on your phone. So I took a snapshot from my cell phone, and this is what you're seeing on the left. That's all I can see, but you can see rooms, units, announcements, topics, and then, oh, it looks like there's a little something, but we don't really know what it is. So this has stumped a lot of people, and it has stumped me in the beginning. So I get it, no judgment. What you have to do, if you're holding your phone in your hand, you literally, where it says units, announcements, you touch that part of the screen and kind of swipe it over to the left. And actually that is the only line on the entire page that moves, but it moves. And then you swipe it to the left, you'll see there's watch party, photos, events, files. Okay, so that's where the events tab is on your phone. All right, and that way you can find it going forward. But it's a big mystery because if you've never done it before, like, why would you know it's there? for a while. Actually, Jen is the one who showed it to me. I was like, I don't have events on my phone. I don't know why. And she's like, you just, scroll. So there we go. Now I know, and now you know. All right. And though on the phone in events, this is what it looks like. You click on going, and then it will register you and send you a reminder. Couple other things. Just again, we got a lot of questions on these things. So anyway, for those of you who are trying to do some of the extra credit ahead of time, and we're like, well, where's the link for this? And where's the link for that? Like our poor admin is like crumbling under the millions of questions about stuff like this. So I was like, oh my gosh, I'm so sorry. Next time I'll teach all this on day one. In the self-scoring tally sheet, which was sent out in the bot and through email and is uploaded in the unit section. In that tally sheet, that is what you're going to be using to keep score, right? But in that tally sheet, I want to show you something. So this is just like a screenshot of it, right? So you have day 1, day 2, and it shows the possible points. And then you self-score. So on the left, you're going to put how many points you earn. Once your homework is done, you're going to send your total points plus a screenshot of your thing or a picture of your page to our admin. And she'll be keeping track of everything for the purpose of the scholarship. All right, so do you see throughout this, all those little areas in blue? Those are all the links. This tally sheet is just for the points that we've already assigned to the different things. There is going to be 10 additional points that are available, and that is related to what is it called? Like the interaction, the amount of what is it called? Oh yeah, engagement. Jen's like, it's engagement. It's the amount of engagement on the Facebook group. So engagement is making posts, commenting on other people's posts, all this stuff. So Facebook looks at how much you're interacting on the group, and then it just tells us who's number 1, 2, 3, 4, 5, 6 through 10, and we will be awarding points based on that as well. So that will be in addition to what's on here, and that's nothing for you to track. That's just for us to track, but that is part of it as well. Okay, and then so on Thursday, because there's been a lot of questions about, oh, what do I do with the homework? I've gotten emails with homework, I've gotten stuff with Messenger, and it's fine, but I just want to clear it up. For your homework every day, all you need to do is fill out your workbook, take a picture of it, and then post it in the homework post, or you can write out what you did for homework in the homework post in units, okay? And then on Thursday, once you're completely done with your homework, you're like, okay, I've maximized, or I've put in as many points as I can at this point. You're going to just take a screenshot or a picture of your tally sheet. You're going to send it to our admin with your total number of points for that. All right, so hopefully that answered a lot of questions. If you guys have further questions, then definitely let us know. And for all the future challenges, we'll try to cover all this stuff on day 1 in a little bit more detail so that everyone has everything that they need. All right, what else? Oh, what I was going to say, as I was kind of putting this together for you guys, next month, we're actually going to do another challenge for the BRRRR strategy. So that's where I'll taking all this feedback to fix it for the BRRRR strategy challenge that we're doing next month. So, don't worry about it if you're not planning on investing in apartments yet, but you're like, oh, I don't want to miss out on the training, but I just don't feel like I'm ready. I want to focus first on 2 to 4 units. Then that's totally fine. I still want you to do everything in this challenge because it's just a great foundation that's going to serve you in all of your future real estate endeavors. But we will have another challenge next month for the BRRRR. All right. So let's get into lead generation. So with lead generation, it's always going to start before you start making phone calls and doing outreach. You have to know what your investing strategy is. So, and as I mentioned yesterday, there's 2 primary investing strategies that we're going to be talking about and teaching you as you move forward into your real estate investing in apartments. All right, so stabilized versus value add. Okay, those are the 2. So a stabilized property is one where there's already tenants in there, there's already management, everything's working, and it's already cash flowing. So of the 2 strategies, it's much more simple. You essentially put your down payment down and your closing costs and whatever else, your impounds, and then you close, and then you have cash flow coming in. It's really, really straightforward. Now, the process of doing that is not so simple or straightforward. There's a lot of moving parts, but conceptually, it's like, okay, I'm putting my down payment and I close. And I'm not banking on appreciation. It's cool if it does appreciate over time. And as long as you keep raising your rents, um, each year, at least a little bit, as much as the market will allow, then you will basically create appreciation with your property. But that's not the whole goal. The goal is cash flow. All right. So, oh yeah, I already said that. So we have immediate cash flow at closing. Now, this strategy, the stabilized purchase, is perfect if you have capital, like you have money to put into play and you're willing to learn how to do it and to go make the acquisition, but you really don't have time to do a whole value add project. The value add project, it does take more time. I'll talk about that a little bit more in just a moment. Okay, but so the stabilized property, you're going to put your down payment and basically have immediate cash flow. And if you're just like, if you have a busy job, you make a lot of money, and just need to park your money somewhere and start getting some return on it, then this is a great strategy for you. All right, now let's talk about the value add. So with the value add, what you're looking for specifically is underperforming apartment buildings. So what does it mean underperforming? So underperforming can mean a number of different things, but essentially you're looking to increase your net operating income. And we're going to talk more about net operating income on, probably a little bit tomorrow, but definitely a lot on Thursday. That net operating income is essentially the revenue of the building minus the expenses of the building, but not including debt service or mortgage payment. Okay, so what you're looking for is an opportunity to increase the net operating income. So that could look like a number of different things. You could go into a property where the rents are just under market and just start raising the rents. That increases the net operating income. You could go into a property that has really low rents compared to market because it's really outdated. So maybe you need to go in and, as people are moving out, or if there's some vacant units, start upgrading the units and renovating them. And you might be putting in money in it, but you're going to increase the income of the property because you're going to start getting market rents. Another thing is looking for opportunities to add additional revenue. So for those of you who have been on the Facebook group or maybe on one of our personal pages, you might have seen the interview we did with one of our mastermind members, Steve Caro. And he, along with a couple of different people in our mastermind, recently took down an 18-unit value add apartment building in Miami. So, the market or the rents being under market, that was one of the things. But what they had was two like warehouse storage units that they're able to go in and rent out. So that is an opportunity to increase the income as well. So that's another value add opportunity. They also have a parcel of land that is attached to that was part of their purchase that they could create income. They could turn it into a parking lot to create income. They could sell it off and create a one-time income, but turning it into a parking lot or something that's going to actually increase the monthly revenue, that actually changes the value of the building because it changes and increases the net operating income, right? And then another thing you could do is decrease expenses. So sometimes you'll see, as you start looking at different deals, that maybe you find a building where, it's a relatively small building and the opportunity exists to create like separate meters for electricity or for water. And by making an investment and not paying for those utilities yourself, that decreases the expense that you had of utilities. Well, that also increases the net operating income. So anything that you can do to improve the performance of the building, to improve the bottom line, is what you're looking for when you're looking for underperforming apartment buildings. Okay. Doing a value add project takes definitely more time and effort. It takes a lot of planning, a lot of coordinating to make it happen. And it's not a short process. It's usually, 12 to 24 months, sometimes longer, depending on how big of a project it is, how much renovation it needs, how long the leases that are there are in place, etc. So it definitely is more time and effort. But the reason people do it, and the reason it's our favorite strategy, is that there's so much profit potential in doing it. And you'll understand more on Thursday when I get into the financial analysis part of this. But I mean, like literally every change you make, it increases the value of the building so much. It's crazy. So I'm going to show you how the calculations work on Thursday. And if you don't already know about this, like you're going to be jaw dropped at how much of an impact it makes when you go in and improve the performance of a building financially. So yes, it takes more time and effort, but there's a heck of a lot more profit in it. And that's why you would do it. So the other side of it is, the reality is there is going to be more time before the property cash flows. So if you don't have time and you need it to cash flow right away, value add is not the way to go. Go stabilized. But if you're willing to wait and you're going for the much bigger dollar, like never less than 6 figures, we would never bother to do a value add that's less than 6 figures. And usually what we're looking for are multiple 6 figure equity increase opportunities. And you have a number of different exit strategies at that point. You can sell the building, basically cash out the profit. You can sell the building and basically roll the profit into through a 1031 exchange into another property. You could refinance the property and cash out your investors that invested with you, if there were any, and then just keep the building for cash flow. So you have a lot of different possibilities, and all of them are fine. It just depends on what you're trying to accomplish. But the value add gives, just has some nice options there as far as strategies. All right, and it's really ideal if your main goal is to increase your net worth and create cash flow. And you're not like, doesn't have to be today, but ultimately you want to start increasing your cash flow. If you can spend a couple of years doing value add and really just, increasing the value of buildings and either, refinancing and holding them, or selling them and starting to roll those money into 1031 exchanges into performing cash flow buildings, ultimately you're going to create a substantial cash flow that way. Anyway, so those are the two main different strategies. And you really need to, before you get too far into anything with lead generation, you need to make a decision as to which of these is the one you want to focus on. And there's nothing wrong with doing both. Like, you can do both, but if you're not clear on what you're trying to accomplish, what you're trying to do, when you're talking to brokers, you're going to sound very scattered, especially if you're new and all the verbiage is new and you're not used to saying it yet. It's hard enough to not stumble over your tongue, and you probably will, and it's fine. It's a rite of passage. Everyone goes through it. But if you're not sure what you want, it makes everything worse. So pick the one that we think works best for you for your first deal. All right. And that's what you're going to focus on for the rest of this entire training. All right. So the other thing I just want you to be aware of, this will be covered much more in depth on Thursday, but I wanted to talk a little bit about like the cap rate. Cap rate stands for capitalization rate. Okay. The higher the cap rate in general, the higher the cash flow. So it's not exactly a return on investment figure, but it could be likened to that. So if you were buying a building with all cash, whatever the cap rate is would also be the return on investment. Okay, so the cap rate is a measure of how well the building is performing from a net operating income standpoint compared to the purchase price. So a higher cap rate is going to equate to higher cash flow. A lower cap rate equates to a lower cash flow, but that's not all that they mean. If you're in a market where the cap rate is, let's say 12%, that's very high. That's a very high cap rate. The likely challenge with that is that you're probably in a bad area, because part of what drives the cap rate is the prices, and the higher the prices go, the lower the cap rates go. So if you're in an area that's not that great, where the prices are still kind of low, but the rents are decent, you'll see a higher cap rate. So it's this tricky little balance you have to find. Obviously, everybody wants to have the maximum cash flow. And if you're doing a stabilized purchase, then that might be okay. But if you're trying to do a value add, you don't necessarily want to be buying in a market where it's got a high market cap rate, because it doesn't give you as much opportunity when you go to sell to make a lot of profit. Because if the market cap rate is 12%, that's what you have to sell it at. And I realize this probably doesn't make any sense yet. It will make a lot more sense on Thursday. All right, but I just at least wanted to lay the foundation so that you know some of the terms, because some of your homework is going to be calling brokers, and I don't want you to be totally lost. So if your strategy is to get into something that's stabilized, you want to be looking at a higher cap rate. Okay. If you are looking for a value add opportunity, you want to be looking at lower cap rate, because lower cap rate markets have a higher value for every change you make to the building. All right. And then the idea is, for a value add, you want to buy at a higher cap rate, improve the building. And then when you sell it, you're selling it at a lower cap rate, which means you have a higher value. All right. And if none of this made any sense, don't worry about it. Don't freak out. It doesn't matter yet. because I will lay all of the foundation on Thursday with a calculator, with numbers, and walking you step by step through it. All right. I just want you to be prepared for when you're calling brokers that they might be like, well, what kind of cap rate are you looking for? All right. So let me just give you a couple answers real quick. If you're looking for stabilized, then you could say, well, I mean, obviously the higher the better, but I mean, if we could get something that's 9 cap rate or higher, that would be great. All right. And then if you're looking for the value add strategy, then you can just tell them, look, I'm open to it. Obviously, I want to, improve the property and then sell it at a lower cap rate than I'm buying it for, but I'm open. All right. So those are some of the things that you can say. And I'll walk you through what some of the other things you can say as well when we get to that point. All right. So with lead generation, we're going to be leveraging professionals for both MLS listed properties and off-market properties. Okay, so, and I'm going to show you some examples when we get through this. All right, so the other thing you're going to be using is commercial property websites such as LoopNet and Crexi. So it's loopnet.com, Crexi.com, and I'm going to show you in detail some of the things about LoopNet to go through and use it. And Crexi is similar enough that if I show you LoopNet, you can go to Crexi and start clicking around and figure it out. But with lead generation, I think in our apartment course, I probably have like 12 different ways to find properties. There's tons of different ways to find properties. What I'm going to focus on during the challenge is the most effective way to find properties, okay? And that is leveraging commercial real estate brokers or realtors for, again, either listed properties or off-market properties. So we have multiple people that are in our apartment mastermind that have closed on apartment buildings in the last couple of months. And I think of all of the ones who closed, only one was actually a listed property. However, all of them that closed came from a relationship from a realtor or broker who had an MLS listed property that our student ended up calling about, and maybe that deal didn't work, but they've developed a relationship like I'm going to teach you how to do, and they ended up getting off-market deals. So most of the deals that our students have closed just in the last couple of months have all been off-market, but they started by reaching out to the ones that they could see and reaching out to the brokers who were listing them. All right. So, and then the commercial property websites, you're also going to be able to find properties there. Now, the only thing with those properties is LoopNet. I don't know so much about Crexi because it hasn't been around as long, but I know LoopNet is basically known for being, it's like where just all the junk ends up. That's how people talk about it. It's like if they couldn't sell it on their insider database, then they'll throw it up on LoopNet. So that's kind of the word on the street about LoopNet. However, when you're just getting started, it's really helpful to get reps in on just looking at deals and reading offering memorandums and understanding what the heck what is the verbiage and what kind of information is typical out there. All right, so these websites, even though the deals themselves may or may not be great, you might find a great deal on LoopNet. I don't know. It's just known to not be the great deals. You're looking for the brokers who are listing the deals, and they're the ones that you want to build relationships with, because in real estate investing, in apartment investing specifically, almost everything happens off market. It's very few properties that come quote unquote to market don't come to market at all. It's all off market. And so what happens is you have a broker in any given market that has a listing before they go put it on the MLS. Because if they put it on the MLS and then another broker brings a buyer, well, now they have to split that 6% commission. But if the broker doesn't put it on the MLS and has developed relationships with all these other investors and they can find a buyer themselves, they basically get to double end it and they would make the whole 6%. Well, apartments aren't cheap, so these commissions are hefty. So they're very incentivized to not end up listing them and try to find the buyer themselves. So you want to develop relationships with these brokers so that when they get an off-market deal, before they list it, that they contact you. That's the whole idea of why we're going to be leveraging professionals for those properties. All right. So what you have to do is you have to start off by pick a cash flow market. Not that you don't have to do this for the purpose of the challenge. You could pick literally any market USA. I don't care, because the point is to get you practicing All right. Don't worry about any one specific call that you're making, because the point is to practice, speaking the language, using the lingo, finding out what kind of questions they're going to ask, coming and asking us, and the Ask Us Anything tomorrow. So you're going to, but overall, like when you're outside the challenge, you don't really want to be operating in markets that aren't cash flow markets, because that's going to make it difficult for the deal to work. So you pick a cash flow market. So you want to try to find one that at a minimum meets the 1% rule. So I know most of you probably already know what the 1% rule is, but just in case you don't, the 1% rule is it's like the kind of this rule of thumb that's used in real estate for rentals. And if you look at the purchase price of the property, what you want to see is that the monthly rent that comes in for that property is equal to at least 1% of the purchase price. Okay, so for example, if you're buying a property for $700,000, you would want the monthly rent to be at least $7,000 in order to meet the 1% rule. Now, the 1% rule is not an analysis tool. I had some people saying, oh, well, blah, 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 analyze the deal using the 1% rule. There's no such thing as analyzing the deal using the 1% rule, because the 1% rule is not a deal analysis. All it does is help you to identify whether you're in a market that is likely to be cash flow. But when you're actually analyzing deals, you have to analyze it for real. What is the income? What are the expenses? What is my debt service going to look like? How much am I putting down? What is my interest rate going to be? Okay, so understand the 1% rule is only for the purpose of helping you identify a cash flow market. All right, so you're going to want to, if you haven't already, and hopefully many of you have, if you haven't already, you're going to want to watch the market research masterclass. And because we're not covering it during the challenge, because we already have a boss masterclass. Plus, I didn't want to take away a whole day of the apartment related stuff when we already have this done for you. But it's just it's an awesome masterclass. It's super, super detailed. It was actually a paid masterclass that we now have basically made it available to you for free. When you registered for the challenge, if you did, you would have got an email, and the email included 2 bonus classes. And one of them was a market research masterclass. So you probably have it in your email, so you can find it there if you haven't watched it yet. And if you have, then excellent, good for you. If you don't see the email, or if you just want to get it quickly sent to your phone, you can text the word market to the Warrior hotline. And that phone number is right there on the screen. It's 619-373-8461. And we have that set up through an awesome program called Text Magic. And it magically will text you back with the link to the Market Research Masterclass. All right, that way you can watch it, consume it, so that when you're moving forward in your own investing journey, you are actually selecting a market based on things that make sense. Like, is the market stable from a population standpoint? Like, is the population increasing, or at a minimum staying steady? You don't really want to be going and doing a lot of long-term investing in a place that is having a year over year decline in population, because what's going to happen when you have vacancies, but now you have fewer and fewer people living there every year? It's going to be harder to fill your units. Okay, so there's a lot of strategy that goes into selecting a market, and it's not difficult and it's not complicated, but you don't just randomly pick a market and start investing there. You want to understand some of the metrics. So that class will teach you that. All right, so you're going to pick a cash flow market, and then you're going to start finding commercial brokers and realtors to talk to and start building relationships with. Okay, so now we're going to start going into where to find commercial brokers and deals. I'm going to show you both at the same time. So remember, I mentioned loopnet.com and Crexy.com. I'm going to give you the visuals for LoopNet. Okay, so we're going to go there, and I'm going to show you how to find brokers and deals. Another place that you can find brokers is just Google commercial real estate brokers in whatever city, right? You can also find real estate brokers and agents in different Facebook groups. So if you go and start looking for different multifamily related Facebook groups, or even like rental related Facebook groups, landlord groups, and you start getting involved there, you'll find that there's a lot of real estate agents and brokers that are in those groups, because their buyers are there, right? You're there. And so they're there. So I was trying to find it and I just couldn't find it. But it was maybe sometime last week, someone made a post in our group, and people were commenting and answering the question. And then somebody in there said, oh, I have multifamily deals. I have an 11 unit, blah, blah, blah. So it's a good place to go and network in general, but you would also potentially find both deals and real estate professionals in those groups that you can start building relationships with and, getting on their list to get deals when they have them. Okay, so I'm actually just going to show you kind of a visual real quick for what happens when you start, building out your relationships on Facebook, and then I'll get into showing you LoopNet. All right, so I just threw a couple of screenshots of very recent conversations. So the guy on the left had sent me a message in Messenger. It was actually in my spam because we're not friends on Facebook, so I don't know when it got there. But clearly, and maybe it's somebody that's on my Facebook group, or they saw me in another Facebook group. I'm not even sure, but he basically sent me a message saying, "Hey, me and my partner got a 21 unit with a laundry room in the state of Oklahoma. Do you know anyone who'd be interested?" And so I just took a screenshot of what he sent me and I sent it to our mastermind, apartment mastermind members, and saying, "Hey, in case anyone's looking in this area." And one of our students, Casey, had said, "I'm interested in that area," and so she ended up reaching out and connecting with him from there. But that's one of the things. Like, I don't think he's a broker. I think he's probably maybe a wholesaler. But it came through being involved in Facebook groups. And then another one in the middle that came to me just a day or two ago. And the question was, "Hello, what market are you in? And where are most of your investors buying apartments? I have a few deals under contract, 2 to 12 units and a 200 unit." So, the rest of my conversation is not, screenshotted on there because only so much fits, but I just said all over the US. And so we kind of went back and forth, and he asked for my email address. So I said, yeah, if he has deals, and, send them my way and I'll take a look at them. So that, again, just because I'm active in different groups, people know that we invest. And so sometimes they just reach out. That's the kind of the easiest one. In another group that we help administer, and some of you might have been in that group, or maybe you were in our group and then you went over to that group, but it was like how to buy multifamily apartments. We do most of the moderation in that group. It's not a super active group, but you will see occasionally people posting like deals. And this is one that was just last week, and it was a contract for sale, multifamily fourplex. Now it's only fourplex, and what we're really focusing on in this challenge is 5+, but it was just a good example. When you're active in different Facebook groups, you'll see all sorts of stuff in there. All right, so now let's jump into LoopNet. All right, so when you're on your computer, you go to loopnet.com, loopnet.com. This is what the screen will look like. All right, so in order to start looking for the properties that you want, where it says for sale, and then it has enter a property type, you're going to click that drop down menu, and you're going to go down and you're going to select multifamily, because LoopNet is for like everything: office, industrial, retail, restaurant, shopping center. The thing that's interesting about LoopNet is I have a feeling that it might look different for you if you go to loopnet.com, because I think it's taking a location. Because I say, look at that picture, I realize that's the San Diego harbor. And I can't imagine that LoopNet all over the whole US has the San Diego harbor as their picture. So if you go to yours and yours looks different, they must be doing it on location. But now I don't actually know. Maybe when I'm out of state sometime, I'll have to pull it up again and see what it has. All right, so you're going to pick multifamily. All right, so that way you're not getting shopping centers or healthcare or whatever else. And then you're going to enter whatever market you wanted to start, researching. All right, so once you hit enter, so I put in Los Angeles, California. I mostly did that because sometimes anytime I bring up any kind of city and I use it as an example, sometimes people go, "Oh, okay, so that's a good market." No, I just literally used it random. So I now am specifically using Los Angeles, California, because I would never invest there. Not that there's anything wrong with it if you are, but for what Jen and I are trying to accomplish, the returns are way too small. The deals are too skinny. So, and the landlord laws in California are insane. They are so tenant friendly. It's ridiculous. And if you're a California landlord, I know you're sitting there right now listening, nodding your head and nodding it back and forth as well. Same with our New York landlords, right? California and New York have horrible laws for landlords. But anyway, so I wanted to show you the example. So you have Los Angeles, right? So it shows you a map of the area with all the different listings. Well, the first thing you need to do is you need to reduce the number of listings to ones that are actually going to be relevant, because LoopNet can have even as small as a duplex is technically multifamily. So you got over on the right, you can see you got 500 results. Well, that's a lot. Also on the right, if you look at the second listing down, it says it's a 4-unit apartment building. Well, in apartment world, apartments are considered 5 or more. So someone might call it a 4-unit apartment building. For the purpose of the challenge, we would say that's not an apartment building, even though they might call it that, because it's valued differently. When it's 4 units, it's valued as residential, which means it's based on comparable sales. When you're dealing with 5+ units, it is based on the net operating income and the market cap rate. So it's completely different. So what we want to do initially, since we're focusing on apartments for this one, is we want to get rid of anything that's less than 5 units. So you're going to go to where it says building size. I'm sorry, not building size. We want to go to price. I forgot. It's going to be under more filters, and I'm going to show you how to narrow it down. First thing we're going to do is put in price. So I don't know if you have a minimum. If not, you could just leave it at 0. But you really want to kind of figure out, well, what's the maximum that I would want to look at? If you're just getting started, I can understand why you wouldn't want to look at a big number. Some of you have already been investing in apartments. You're trying to scale, and you're much more comfortable. So whatever you're comfortable with, put in that max where it says price. Okay, and that will narrow the field of properties. All right. And then the next thing you're going to do is narrow the field of properties by getting rid of anything that's not at least 5 units. So you're going to click there on more filters. So click more filters. And then this is the next screen that comes up. So depending on how scrolled in you are, you might not see what I have circled right now on your screen. So you might have to scroll down. See, there's a little scrolly bar on the right. So you have to scroll down. It's below lot size, and you're looking for the area that says basically units. Rooms and beds don't really apply to what we're doing, but units, right? And so what you're going to put for a minimum is 5. And that way you're only going to get a list of properties that is at least 5 units. But let's say, for example, you're like, well, I'm not interested in anything that's just 5 or more. I don't want to look at anything that's less than 20. It's different for everyone. If you're new to apartments, you might be like, well, I'd love to get an apartment building, and that would be great if I could get little 5, 5 to 8 unit. That's fine. And there's other people who are just not there. Like, you're at a different place. I want at least 20 units. I want at least 40 units, whatever it is. This is how you narrow the field down. All right. And then you click search. So when we did that, and I just basically did 5+ units, it's still a boatload of properties. And so this is the first 3 listings that I have there. All right. So we see the first one is, almost 3.9 million. It's a 4.76% cap rate, which is actually probably pretty high for Los Angeles. It's really low to me. I was like, oh, I just want a higher cap rate for sure than that, because we're looking for more cash flow. But in LA, that's probably considered a fairly high cap rate, and it's for a 10-unit apartment. The next one down is a 17-unit apartment building for $8 million, and it's a 3.1% cap rate, right? And then the one below that, 4.9 million in West Hollywood, 11 units, and it's a 2.75% cap rate. So these are exceptionally low cap rates. So it's not someplace that you'd really want to be investing if you're looking for cash flow, because there's probably going to be none. Or maybe you're hoping to break even with a massive down payment. So if your plan is cash flow, getting a decent return on investment, it's not a good fit. So you probably ask the question, well, then why would anybody invest in Southern California? The prices are so high. Because some people are appreciation investors. We don't teach that, because frankly, during the 2008, taught a lot of investors, including us, some pretty important lessons about making sure that you're not banking on appreciation. Appreciation is awesome when it happens, but it should be a bonus. It shouldn't be your primary strategy. And a lot of times when people are buying in California, well, either they have so much cash they have to put to play that it doesn't bother them that it's a low return. But a lot of people are doing it like, well, it's California, so it's going to go up. So that's not a safe play in our book. So we don't invest that way. We don't teach that way. But a lot of people do choose to invest that way, or they have so much money it doesn't matter if they make a mistake. All right, but you guys are not going to do that. Of course, we're going to teach you good, sound principles that you're going to use in your career going forward. All right, so let me just show you what we're looking at right now. So see at the top, 4077 McLaughlin. All right, so I clicked on that, and basically this is what it shows. So it showed a couple pictures. Then below that, it shows investment highlights, talking about the property. Now look over to the right. Over to the right, you're going to see a broker, like who's listing the property. So it has their name, phone number, probably a website if we go further down. etc. Okay, so this is the information you're going to start gleaning from whichever market you've chosen. So your homework is to go find, I think it was 7 brokers. I can't remember if it's 10 or 7, but anyway, is go find brokers that you can call. So this is how you're going to get their information. So you write down their name, write down their phone number. Okay, so LoopNet's a great place to get that. All right, so since I can't scroll down the page right now, I'm just going to show you the screenshot of the next page. So as we went down, the executive summary talks about the property. What I want to point out to you is what I haven't read right there. So 4077, something, something, something. I can't read it because I covered it on accident. But basically it says in red, renovated units with a high in-place cap rate of 4.76%. So what that means, when you're looking at these executive summaries and you're trying to glean information, I wouldn't look at this building and go, oh, this looks like a great value add opportunity, because it's probably already been purchased as a value add opportunity, and now they're going back and they're selling it with the renovated units. So they've probably already increased the rents, and basically that's where the value is, and now they're selling it as a renovated property. So this would be a deal you look at if you're looking for stabilized. Now if it said there's a lot of upside potential here, rents are under market, rehab, you can upgrade all the units. If it says language like that, then that would kind of prick your ears up if you're looking for value add. But in this particular case, this one would be more of a stabilized purchase. All right, and so if you kept going down, I want to point out a couple things. All right, so below the property facts, there's some links. Now, every single property is going to be different. Some of the links, it's a link to the offering memorandum, and the offering memorandum is sometimes a 15 to 70 page document. It depends on who the broker is and probably how much commission they're going to make. But the offering memorandum just has all the information about the property. So sometimes you'll see an offering memorandum and you could download it. Sometimes you have to fill out a document and sign like an NDA, a non-disclosure agreement, and then you'll get it. So all those things are normal. So if you get that, don't stress out. Don't worry about it. It's fine. They just want to make sure that you're not going to be disclosing information. You have to sign something. So in this case, the thing I thought that was interesting, I was like, oh, Kelly Morgan Commercial Group website. So I want to, and then as I clicked on it, looked at it, I was like, oh my goodness. So in just a second, I'm going to move over to that website and just kind of show you how, when you're kind of going down the rabbit trail of this, just how much opportunity there can sometimes be, right? So already we have the broker, we're looking at the deal. Maybe the deal works for what you're looking for. Maybe it doesn't. I don't mean this deal specifically, but in general. But there might be an operating memorandum or offering memorandum, in this case, a website that we're going to go take a look at. All right. Below that is another thing I want you to notice: unit mix information. Now, this one doesn't have a whole lot of useful information. It just, what it says is we basically have a 1-bedroom, 1-bath, and there are 7 of them. So see over to the left where it says description. 1+1 means 1 bedroom plus 1 bath. 2+1 means 2 bedrooms and 1 bath. 2+2 is 2 bedrooms and 2 baths. So it just shows you the unit mix. If you saw 0+1, that would be a studio. No bedrooms, 1 bath. Studios are also called efficiencies. So if you see that language listed anywhere in the when you're looking at LoopNet or any other deal, efficiency, studio, it just basically is a very tiny little unit and there's no separate bedroom. So it shows you the unit mix. So we have 7, 1, and 2. In other listings, what you'll probably see is average rent per month and the square feet. They didn't fill it out on this one for some reason, but it's common to see it there. All right, so give me just a moment and let me switch my screen real quick and show you the website. Okay, hopefully that came over okay. That was smooth. Okay, it's always a little tricky. Always a little tricky with the lives. Okay, so here is the website that when I clicked the link that opened. And so here we have the broker, Kelly Morgan, who is a Richard Branson lookalike. So Richard Branson, if he was a real estate broker, Jen's laughing at me right now, this would be him, because I mean, he kind of looks just like him. Okay, neither here nor there. So it's interesting. So you see home, about, properties, oh, current listing, sold properties, services, and their contact information. So I was just scrolling down and kind of checking them out. They have a very fancy website. It's pretty cool. So we're going to scroll down. They got some testimonials. Fabulous, fabulous. I mean, that's just cool. They have their team. So you have all these different team members that they have. So we keep going. And then we have current listings. So this is like what I was like, oh, yes, I want to show these guys. Okay, so like under their current listings, you see they have one on the left, Van Nuys, which is very close to where I grew up in Simi Valley. Little Van Nuys, little 6-unit for 1.5 million. And then over on the rest, another 6-unit in Mar Vista. I don't exactly know where that is, but somewhere in the LA area for 2.5 million. And what else? We have a 10-unit on McLaughlin, which is the one we were looking at. That was 3.9 million for 10 units. And then the one on the right is under contract, 13 units for 4.2. A lot of times the reason that a broker might leave a property up, even though it's already under contract, is because sometimes when someone's in due diligence, they might decide to back out, or maybe they couldn't get their funding. And so it's almost like they're still advertising it, but it's technically under contract. So it's not for sale, but if you're interested, you might still reach out and be like, hey, if something falls through on that one, I'm interested. Okay. So I just kind of wanted to show you that sometimes you might click on a website of a broker that has a property on LoopNet and find out, oh, wow, they have all these other properties available too. But that's not even the best of it. Let me show you this little ditty that I found. I was like, oh, what's this? Off-market principals only. What they're saying by principals only is no brokers. So they're saying if you're a broker, don't bring your client because these are, we're going to sell these directly. Okay. So what you see there is off-market, which means it's not listed on any multiple listing services, not on LoopNet, it's not anywhere. Off-market, 64 units in Panorama City with more than 60% upside, offering at 12 million. All right. So when you just look at the verbiage, more than 60% upside, that would indicate to you a value add opportunity. Okay. Because there's a big opportunity to increase the value of the property. All right. And then over on the right, another off market 93 units with a 55% upside, offering it 21.5 million. So for those of you who are eyeballs are like popping out of your head like a cartoon character at some of these numbers, don't stress out. It's because we're in LA. We're in LA area, and the prices are crazy. But what you're going to find is you start doing research in other areas. There's a lot of Midwest markets that are very solid for rent. They got good stable population growth, job growth. Minus COVID, of course, but regular job growth is solid, and the prices are significantly lower. So don't stress out about the amounts being so high. It was just a way to show you as an example what you can find when you start digging around and getting these websites. And it's really exciting because it puts you in action in a way that's really not threatening at all. You're probably not going to freak out until I get a little bit further and I tell you your homework. That's when you're going to freak out about calling brokers. Don't worry. I'm going to prepare you on what to say before I do that. But this initial part is just, it's really easy to start taking action and creating momentum, which then starts to build your confidence. And then when you start calling brokers and going through that, you just start growing, and this all becomes doable. Investing in real estate, investing in apartments can leave your someday I want to list and can enter your no, I'm doing it now list. All right. So give me 1 second and let me get back to our PowerPoint. Please hold. Okay. Holding commenced or stopped. Well, whatever. You don't have to hold anymore. Okay. So that was the Kelly Morgan commercial website. Wasn't that cool, you guys? Like, I was so excited when I found that example to show you. I mean, and stuff like that happens all the time. But it's just nice when I can actually give you an example of it, a visual. All right. Oh, and then there's the screenshot of that one, off-market principals only. All right. Let's talk about talking to commercial real estate brokers and realtors. Like I said before, there's a ton of different ways that you can go find deals. A lot of them are very time consuming. A lot of them can cost a lot of money. So I'd rather not send you down a rabbit hole of spending a bunch of money unnecessarily when there's really one main way that will probably produce about 93.447% of your results. And that was calculated with real data from my own brain. Okay. So talking to commercial brokers, for starters, you got to know what you want. Okay. So that's why I started this whole, training today on your strategy. Like, you need to know, are you going to be going in and buying a stabilized property, or are you going for a value add? So make a decision and be crystal clear on that and talk about only that. All right. And I know that they might say, oh, but I have these other ones. You could say, well, go ahead and send them to me, but here's my focus. So don't be wishy-washy about it. Be very clear. Okay. The other thing you want to be clear on is, what is the number of units you're interested in? And there's no right or wrong. This has 100% to do with your comfort level. Okay. But at a minimum, you're not going to talk about anything that's less than 5 units if you're going for apartments. Okay. If you are taking the apartment challenge, but you're really not going to do apartments yet, you're going to be doing less than 5 units. And you just tell them, if you're doing 2 to 4 units, it's fine. If you're focusing on apartments, it's the minimum is 5. But like I said before, if you're like, I really have no interest in a 5-unit building, if it's not at least 30 units, I'm not interested. Whatever's right for you. So if you're just getting started and you're like, hey, picking up a 5 to 10 unit building would be a huge win, then cool. So whatever it is, you want to have a range. So you might say, oh, I'm interested, anything that's 5 to 10 units, or, 10 to 20, 20 to 40. Just get clear on it. And I want you to sit down and write these things down, bullet point them before you get on the call. Okay. Because then you're less likely to get tongue-tied or hung up or confused by questions asked, because you have the main points written. Okay. What is your strategy? So I'm looking for a stabilized performing apartment building, or I'm looking for value add opportunities, either one. Okay. The number of units. What price point are you looking to stay within? Now, keep in mind, as you're looking at deals in that market, you'll probably start to at least get a ballpark idea for what price point is going to make sense for the number of units you're looking at. Okay. And it's okay to give them a range. You might say, anything between, 800,000 and 1.5 million, or anything between, 5 million and 7 million. What depends on where you're at financially and what is appealing to you. Okay, so get a price point range, write it down. As you're talking to the brokers, what you're going to be saying is you're telling them what you want. And this is in case they come back and ask you questions about your experience. You can reference, oh, my partners and I, or me and my partners, blah, blah, blah. This is what we're looking for. My partners and I are looking for value add opportunities that are, 10 to 20 unit buildings. We're looking for properties that are going to be between like, $1 million and 1.5 million. And you don't understand what I'm saying? So reference me and my partners, and that way it doesn't all have to be on you. So that if they come back to you and they say, well, what about X, or what about Y, or ask you about your experience, you can say, well, that's not the part of the business that I handle. That's my partners, so I'll find out and get back to you. So when they ask you a question, don't freak out, listen to the question and write it down. And then bring it to the call tomorrow to ask us anything. Like, it's like perfect opportunity. Like, you're getting coached by us, like at the exact time that you need it, right? So just write it down, but just be like, yeah, I don't have the answer to that question. My partner handles that part of the business. My part of the business is reaching out and starting to build relationships to start getting deals in for us to evaluate and make offers on. Okay, so that's what you want to do. So, keep it simple. There's a million different things that could come up. Don't worry about it. Everybody goes through this part where you just got to get on the phone and start practicing asking the questions and saying the words. And if you stumble over your tongue and you say the wrong acronym, don't worry about it. Just be confident. Be like, well, that's how we say it where I'm from. I'll give you a good example of that. Jennifer's laughing because I do this all the time. I say things with complete confidence. When she asks me a question, I'll make up some answer, say it with complete confidence, and she'll side eye me and be like, did you just make that up? Yeah. So, but it's helpful in situations like this. Okay. So when you're dealing in 1 to 4 family, let's say you're dealing in, you're fix and flips, ARV is, after rehab value, is a really important part of the analysis. And when people are new and talking to realtors, it's really common to say AVR because you're not used to saying ARV. It's not part of your lingo yet. So you might say AVR. Anyway, so when you say something like that, or you say the wrong word, don't don't worry about it. Or if someone, first of all, they're not going to say anything because that would be so incredibly rude that they're probably not going to say anything. And if they do, well, first of all, screw them. But second of all, you could say, "Oh, sorry about that. I'm distracted. The mailman came up," or you could just make something up, or my cat just like climbed up my leg. Make up whatever you got to do to get through the awkward part. So it's a real thing. The thing is, you have to do this. You have to do this if you want the thing that you put in your homework yesterday. Your why has to be stronger, has to be bigger than any fear you're going to feel by going and doing something that's new. The reason you're afraid, if you are, some of you guys are like, I'm not afraid at all. Actually, probably maybe like 2 of you in the whole challenge, right? Out of several hundred people. Most people are nervous when they're doing something new. And the reason that you're nervous is because you're accustomed at this point in your life, especially if you're, in your mid 30s or older, and many of you are, you're used to being really good at something from your career because you've been in it for a while. So you've had the opportunity to go through the difficult, awkward parts and get trained. And now you know everything about that. And so you're not used to doing stuff that you don't know. And it makes you exceptionally uncomfortable. And what I want to tell you is that that's very normal. It's actually very, very normal for high achievers in particular. So if you're one that you're like, you go, whatever you do, you go for it. You go for it hard. You're gonna go get it. But you're used to being the subject matter expert. This is a little bit more of a painful process. But just like everything else you're so flipping good at now, you'll get there. You just got to do this part. You got to get on the phone and talk to as many commercial brokers and realtors as you possibly can. Because here's what I promise you. A couple of things are going to come of it. One, you're going to start getting deals. Even when you're not that great on the phone, you're going to start getting deals. Two, you're going to start learning how to speak. You're going to start hearing their questions and learning how to answer them. And then going back and calling them back to deliver the answer that your quote unquote partner, provided you, is going to start increasing your confidence to the point where this won't be scary anymore. And then of course you're going to have a heart attack when you go to make an offer. But again, every part of it it's learning. It's good times. It's good times. Okay. So here's how to practice without dying of fear. All right. Like one, I give you some of the things. If you say something wrong, then just say, "Oh, sorry, I was distracted." Cat leg, whatever you're going to say. But the other thing is, if you start in a market that you have zero intention of investing in, that's a great way to do it without having to feel too fearful. Because if you get on the phone and let's say you just all the words and you've been speaking English your whole life since you're 2, and all of a sudden your tongue doesn't work and you can't get the words out, or you're hyperventilating, or you say the wrong thing, or whatever else happens, or you just don't feel that confident about it yet because you're just new. If you're doing it in a market that you weren't going to buy in anyway, it doesn't matter. All right. It doesn't matter. You're using that opportunity to have a conversation with someone for the purpose of practice. And I mean, you never know. You might end up being surprised and they send you a deal, but that wasn't the point, right? The point was to take reps on the calls. So if you feel like, I'm not ready to call in a market that I would actually invest in yet, fine, pick a different market. I don't care. As long as you are calling and talking to brokers, you are going to move your business forward. Okay. So, and then again, remember tomorrow we got the Ask Us Anything. It's at 4 p.m. Pacific, 7 p.m. Eastern, and whatever all the different time zones in between, where you live. It's going to be right here in the Facebook group, like everything else. And you come on, Jen and I are going to be there. You start putting your questions in the chat based on the homework that you're doing today and even tomorrow. And we will answer those questions. We'll coach you through it so that you can start moving forward in your business. All right. So now let's talk about the actual specific homework. So I want you to make a list of at least 7 realtors. I mean, here's the deal. The more, the merrier. Okay. Because you might make a list of 7 realtors. I say realtors, but commercial brokers, commercial realtors. Make a list of 7 and call all of them, end up leaving voicemails. If that's the case, go make a list of 7 more. I don't care if you have to write on the back of your workbook. That's fine. So I only had 7 spaces, which is why I put 7, but just get it going. The whole idea is I want you talking to at least 3 realtors. Okay. So you're just going to practice your script, and your mindset through that whole thing is, I'm just taking reps here. I'm learning how to make my brain and my mouth attach to each other so that eventually I can speak so fluidly, so smoothly, and without my heart pounding out of my chest, right? So 3 realtors. So your homework, if you want your homework to qualify for the scholarship contest, you must speak to at least 3 brokers or realtors, okay? As long as you get all of everything done and posted before midnight, you'll get 2 points, okay? But you can't just write down a bunch of realtors and not call. You got to call, and then you're going to write down, what did you learn from those conversations? And what new questions do you now have? Okay, and then attach a picture of your workbook. So just like always, and then the homework post is in the units. So you go to units, post your homework there. The extra credit for today is connect with Jen on LinkedIn. I also have a LinkedIn account. I don't know. I can only manage so many things in my brain, and it just doesn't fit. So I do have a LinkedIn account, and there's probably even stuff on it, but I don't spend any time on LinkedIn quite yet. So I just have this extra credit. Connect with Jen on LinkedIn. She's much more active there. She was just such a boss in corporate America. So she has a ton of corporate contacts and stuff, and LinkedIn is where you do that kind of thing. So connect with Jen on LinkedIn if you're on LinkedIn, and you can send her a message, say hi. And also the other extra credit is subscribe to our YouTube channel. Now, what I want to tell you is we have a YouTube channel that's called Warriors of Wealth. Or I think if you search it, you'll end up on our other YouTube channel that we don't really do anything with anymore. But it was when we were doing more business consulting stuff, because we've done business consulting, real estate investing, a lot of different things over time. That's not the right YouTube channel. The right YouTube channel is the one that's in the link that's on your screen right now, but it's also in your tally sheet. So it's YouTube, and it's basically called Multifamily Real Estate Investing. Okay, so that's the one that I want you to go subscribe to. What you're going to realize is that we put out a lot of really great free content. And so if you're subscribed, 1, that helps us to grow our channel, which we are excited about. And 2, you will get notified. So subscribe and ring the bell. I learned to ring the bell from my kids because they watch YouTube, and when they're playing YouTube channel maker or YouTuber, whatever they call themselves these days, they always say subscribe and ring the bell. So I don't know what they're talking about with the bell. Just kidding, I do, but click it, and that way you'll get notified. All right, that's your homework, should you choose to accept. And of course you choose to accept because you have a big why, and we are here to help push you through so that you can have everything that you deserve to have, everything you want to have, that you started dreaming about, wishing for, and envisioning yesterday. All right, so let's talk about tomorrow. Tomorrow is day 3. Woo woo. We're going to be talking about financing. How do you finance these multifamily deals? So we're going to get into some depth on financing, and also how to raise private funds or private capital for your deals, but without going through complicated syndication. Okay, so that's what's in store for tomorrow. It's been amazing. You guys are incredible. We are so proud of you. It's such an honor to be here with you, to work with you, to speak into your life, to encourage you, and have an amazing day. Go out there, make some serious stuff happen. And I cannot wait to see you guys tomorrow.